Well, after a long weekend, it was a magnificent Monday for our markets. The SENSEX and the NIFTY touching their highest intraday levels since the 7th of October 2008. A combination of fund buying, short covering, positive global cues helped the SENSEX reclaim that 12,000 mark and close 700 points higher. The NIFTY posted a fantastic rally, zooming close to 200 points to close at 3654. On What's Hot Tonight, we ask, will this rally sustain? Joining us, Udayan Mukherjee will also be joined by Prakash Chaturvedi of Dalal Mutual Fund in just a bit. But Udayan, let me begin with you. It's been a fantastic rally for the markets when everyone was calling for a correction. Has the length of this rally, in a sense, surprised everyone, and are many people feeling left out?
I think so, Harsha. I think a lot of people have been left out, and people would be surprised with the extent of this rally, no question about that. And I think it is that left out feeling that you alluded to, which is giving rise to these phenomenal spikes like you saw today. And you can almost sense that the crowd is now beginning to get into the act, because at 3,000 NIFTY, there were too many voices of disbelief. If you ask people on the street, they would say, no, we don't believe this. The market will fizzle out at 3,100. And then the NIFTY took out 3,100. Then there was disbelief saying, okay, the rally, it is still a bear market rally. It may extend to 3,400, but not much more than that. And the market paused at 3,500 for a while, for 7-8 days. And that is the point where the crowd was saying no. So the rally is now over. Pre-election, we get a fall to 3,000 levels. And maybe we'll consider buying at that level. And today we had a breakout above 3,500, taking us to 3,650. So this series of breakouts, which has been flying in the face of repeated calls for correction, enabling people to get in, I think has left a big amount of pain in the market and a huge left out feeling. And now the patience of the crowd is beginning to run out, which is why you're seeing this huge amount of participation coming in now. Stock futures open interest is going through the roof. Today, huge amount of shares got added. Institutionally too, people cannot stay out in cash with this kind of performance. And because of that pain, that money is also beginning to come into the market. So, you know, this kind of a rally, after a 40% rally in 7 weeks, to see a 7% spike on a particular day. And it's not just in India. I think the left out feeling is very visible in other parts of other global markets as well. People have to come in, and that liquidity factor is driving prices a whole lot higher. Now, you've got an event, of course, next Saturday. So it would be interesting to see if next week or sometime in the next 10 days of trade, you get to see that profit taking before the big event, or this rally actually surprises with the assumption that even post the 16th of May, the markets will not have a meaningful correction.
All right, Udayan, you talked about the liquidity factor and how that's driving this rally. You also talked about the elections. But what are the other factors that are triggering the rally, specifically the one that we saw today, a 730-point jump on the SENSEX? Is it largely on account of the fact that earnings have been better than expected, or are our markets also playing along with the fact that global equity markets seem to be rallying at this point in time? How much is the connect?
I think all of those factors might have played a part. I don't think earnings itself has been the driver of this rally. Yes, there have been a few surprise numbers from sectors like cement, etc. But the number of upgrades after this earnings season still are very small, or too small to lead this kind of a rally. So I don't think it is earnings. Now, whether it is expectations that earnings for fiscal year 2010 will not be as bad as people thought earlier, that's a moot point. I mean, I don't know the answer to that, but that could be something which the market is pricing in. Yes, this has been a global rally because global liquidity is finding its way into equities over the last 1 month, and that certainly has been a big reason or a big driver of this rally. But I think in India, because India has outperformed such a lot, there might be a growing feeling in the market that even the election might not break the back of this rally. Because if the market was very suspicious of post 16th of May, then I doubt whether it would have had the courage to rally on so much and so ferociously. It might have held its own, but it probably would not have rallied so much. So it may be possible that the market is saying through its moves that even if for a few days there is uncertainty, eventually there will be a stable coalition, and eventually, which is 10-15 days after the 16th, the markets will have more reason to rally than to correct, and maybe a little bit of that is getting priced in. Now, these are difficult things to decipher and imagine ahead of the event itself, but the way the market is rallying 10 days before such a crucial event, I think there is a little bit of that assumption which probably is getting priced in today.
Well, thanks for that perspective, Udayan. But what should an investor do in this market? Prakash Chaturvedi of Dalal Mutual Fund joins in. Thank you very much. But we're seeing a spectacular rally in the markets. What should investors on their strategy be at this point in time, and what are you as a fund house doing?
See, my personal view is that I think there is some positive signs in the economy, in fact, which are leading to more optimistic outlook for the period when the economy will turn around. I suspect it may not happen in the next 2 quarters, but the market seems to feel that in the next 1 year there will be some turnaround, and there are some early signs of that. What has also happened is that overseas inflows and overseas sentiment have slowly turned positive, and you actually see instead of outflows, we have inflows coming into our equity markets. Last but not the least, there seems to be now this belief that a stable political configuration will come to power in June. I think all of this is combining together to cause this positive sentiment. Let us look at it from another perspective. I think on a P multiple basis, for 1 year forward consensus average earnings for the index, the P multiple is still maybe at around, say, 12 times, 13 times, whatever. So I think we are still in the bottom quartile of the long-term valuation band. And the judgment that one has to make is whether in the next 12 months one will see some kind of economic bounce back. I think if the belief is that there will be such a bounce back, these are still maybe good entry points. However, as a fund house, we are still cautious. Our sense is that all rallies have corrections. There would be some correction. That would be a good point of time to enter. But from a longer term perspective, things are beginning to turn positive.
All right, things looking positive, Ved. But from now till the 16th of May, that's when the election results will be out with. How should investors actually position themselves, and post the election results, what should their strategy be? What are you advising your clients? I know you can't talk stock specific, but what are you advising clients at this point?
I think it largely depends on the risk appetite and the period of time that investors want to be invested in the equity markets. I think short-term traders should be careful. I think some profit should be taken off the table. However, I think if investors believe that the economy is turning around and have a medium-term perspective of 3 years or more, I suspect that these are still good entry points, because quite frankly, P multiples of 12, 13 times, given the long-term potential of growth of the Indian economy, still call for bottom quartile valuations, and investors can still take money. The all-season advice obviously is to invest through systematic investment plans where you average out your investment price over a 1 year or 2 year period.
What's your assessment of the fund flows into the market, Ved? Do you see fresh money coming in?
See, I was at this Global Emerging Markets conference about a month or 40 days back, and I came back with this feeling that certainly the sentiment for emerging markets, and particularly for India, China, is turning positive, and there is a fair amount of money waiting on the sidelines, which will enter, especially if this money gets a left out feeling. I have this impression now that it is this money that's coming in. There was a left out feeling, money is coming in, and I guess there is no doubt about the fact that relative to developed markets, the investment sentiment for emerging markets and for India is more positive than it was in, say, January, February.